Okay, so this is about a trade I took on the 11th of June, and it was in the PM session. All right, so let's get into it. So first of all, what did I see before? And before we continue, it's actually I previously wanted to market maker sell model. So I was anticipating this low to be taken. Like my eyes were drawn. Sorry, my eyes were drawn to this sell side liquidity here. You know, and I found it valid when these stops were taking, the liquidity levels or the buy side, levels were taking. That was, one of the confirmations I had, But you have to know it's not just about, going on the lower time frame. By the way, this is a 1 minute time frame, so it's not just about seeing liquidity taking on lower time frames and then you feel like you should short or you should buy. You have to come with tangible or reasonable logic or narrative, something that um has a strong alignment with the higher time frame. you know so I'm just going to walk you through what I did or what I thought initially, when I was anticipating the sell move, which didn't happen. My stop was taking. So yeah, let's go into it. So first I was looking at the 4 hour, and that's the mistake I made. I just uh, came to my chart and then opened the chart, and then I was looking at this fair value gap here, and I said to myself, yeah, I know the indices were kind of bearish, so the first mistake was I already had a predetermined bias. Like it was like I was biased. It was subjective. Like at the back of my mind, I was like, today I'm going to sell. I was like, today I'm going to sell the indices, like as Nasdaq being my favorite. So before sitting down on my desk to trade, before anything, I was already saying I was going to trade. I was going to go for sales and and whatnot. So I came and I was looking for sales, and I saw sales and I took sales. You know, so it's very important, very very important to, highlight the fact that it's very important to be flexible, in your analysis, trading, especially being a day trader. You have to be very, very flexible in your bias. Meanwhile, I don't really go with the concept of bias, bias this, bias that, I prefer more like narrative concept. So narrative tells you is a daily bullish or bearish, is a 1 hour bullish or bearish, is a 4 hour bullish or bearish, weekly, is it bullish or bearish, and if it's bullish or bearish, you have to know your invalidation level. Where is price gonna go, and which level is price gonna stick to for me to continue being bearish or bullish, so you have to map those out. You have to know, you know as long as the price doesn't go below or above this level, I'm still gonna remain bearish or bullish. You don't just switch your quote unquote bias mid sessions, just because of you saw a move. So yeah, mistake number one. I already had a predetermined. I don't know if I should type this out. Maybe we should type it out. Let's see. So I already had kind of a predetermined bias before coming into the chart. Can we do that? Can we do that? Can we do that? Predetermined bias. All right. So predetermined bias, quote unquote, bias before coming to the chart. Make it smaller. Even smaller. So that's mistake number one. Uh, yeah, mistake number one. Number two. Number two. Maybe let's do number three. I don't know how many mistakes I made, but just let's just say 5. You know, let's just say 5. So we're gonna go change it as we go. All right. So first mistake, predetermined bias. I wanted to sell the market before coming to the chart. Like I didn't care what the market was already doing. You know, I did not care about anything. Just wanted to sell. You know, so when you come with that kind of mindset, you're gonna get hurt. You're gonna get smoked all the time, most of the time. You know, at least for me. So yeah, I was looking to sell. You know, from 4 hour fair value gap, which didn't work. I mean, this is the origin of the origin of the like the whole, you know, quote unquote loss. You know, like the loss in the trade. This is the origin. Like once you get your narrative wrong, or your point of interest, yes, this is point of interest. Once you get it wrong, every other thing becomes wrong. You know, like your analysis, your confirmations, your entries, your stop loss, your TP, all those things doesn't matter. Once you get your point of interest wrong, man, pretty much you are done for the day. You know, like you're just like, you know, trying to take your loss and just go, you know, go about your day. You know, so it's very, very essential. Where is the wait? Okay, show everywhere, man. Don't play with me. All time frames. Okay, so let's just put it. Oh, let's just put it here. So let's put it here. All right. So the first mistake, predetermined bias before coming to the chart. Wrong. We have to be flexible. Flexible. We have to adapt to whatever price is telling you, showing you. All right. Don't say yesterday was bearish, so today I'm gonna keep selling. You know, you have to come with a clean slate, a clean mindset, a clean um anticipation. Just follow what price is telling you right now. Okay. So all right. So okay, let's go to the lower time frame. Lower time frame. Let me just show you the. I mean, there's nothing much to talk about. There's nothing much to talk about. I told you once you get your. Where is the? Why this thing? Just stay here, bro. Stop moving around. Um, I'm not trying to do. All right, whatever. So there's nothing much to talk about because I already said once you have your point of interest wrong, then you are pretty much done. Just take the loss and go because your point of interest is wrong. So it doesn't matter if maybe your entry model or your you know, you had confirmations and confluences. It doesn't really matter. Once your point of interest is wrong, that's the beginning of the beginning of you make your mistake, your big mistake. Once your point of interest is wrong, you can't reverse. You can't do anything about it. Just go. Just take your loss and go. You know. So there's nothing much to talk about. So the entry model I used was a breaker plus an FVG. So you see here, I mean this wasn't really a break. This wasn't really a break. I told myself, I said once price break below this, you know, below here, I was gonna sell. So that was what happened. As you can see, it didn't really break, you know. So I just sold because I was already like anticipating a sell, you know. So as you can see, we had a sweep over here. And by the way, this was my time of interest, you know. This was my time of interest. This is power hour, 3 p.m. NYC. Um, so we had what is it called? We had um buy side taking, and then we had another buy side taking over here, and then price uh broke, kind of broke, but it didn't really displace, And I wasn't supposed to take this trade because price didn't really break here. Like an actual break for me would be price taking this high, then breaking this low with displacement, like more candles, like full body, that would be my ideal entry, you know. So the entry model was right, everything was okay, just that my point of interest wasn't good. And what was my point of interest? My point of interest was the 4 hour POI, which wasn't valid because I was going against the trend, you know. So that was it. As for my entry model, it was okay. I entered right here once price below went below here, retracement, I entered, you know. So yeah, so that was it. So that was it. I took the loss, and I was okay with it. I was okay with it. I took the loss and I learned my lesson. All right. So so now let's look at the daily time frame. So let's see what really happened. So on the daily, let's take this out. Take it out. So on the daily, what really happened? On the daily, we have, matter of fact, from the weekly, let's stick with the daily, but on the weekly, we had SMT too. We had SMT on the weekly, but on the daily, we had this SMT as well. Bullish SMT, and then bullish SMT, and this price was actually weekly POI. What did I say? Weekly POI. You see that? Weekly POI, high time frame. We had price taking this low, so that was already like indicating that we should just look for buys, continuous buying, as long as price taking this low, we are in a weekly higher time frame point of interest, and we have SMT. What else do you want, bro? This is very clean. Look for buys. Just look for buys. That was the best bet. So this was June 11th being a Thursday, and this was a Wednesday. So this was previous day high. So previous day high. Where is it? Previous day high. The previous day high. That's number one. And then number two. Number two is okay. Let's use um gray box. So that's M15. M15. So from the M15, we had this bullish fair value gap. We're supposed to trade off of that. So yeah, on the 1 minute, actually. So let's take this off. On the 1 minute, and actually, this move down here was also an SMT, bullish SMT. Bullish SMT. How did I know? How did I know? Let me show you. You see here? You see here? You see here? You see here? See here? See here? All right. So that's how I knew. It was an SMT too, and it was happening where by 10:06. Look at that, 10:06. So that was a clean entry. Like that was literally a clean entry for longs. Longs. Where are we longing into? You can put your stop loss here. Here, down here. Where are we longing into? So on the 1 hour, what do we see? We have this big imbalance. So this will be our kind of drawn liquidity. So 50% of that will be your target. So we just do 50%. So once you get to 50%, you're out. I mean, this is PM session. Just want to get out and get in and get out as quickly as possible. So 50% will be around here. You know. So pretty much that was it. 1 to 3. How many minutes? How many minutes did it take? How many minutes? Like 25 minutes. Easy, 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 easy. So I mean, obviously, it looks easy when it's hindsight, like when everything has happened, it looks easy. But if you look at it, this was a clean setup actually. We have SMT on the higher time frame. Price was already coming from a weekly point of interest. We have price coming from 15 minute point of interest, like 15-minute POI. We have price coming. We have price on the previous day high. Previous day high. We have SMT. Time of interest was aligned. Like we have SMT again on the lower time frame. Bro, what else you want? Take a buy. You know. So yeah. So that was it for this one. I hope you got something out of it. So it's very, very essential for you to be aware of what's happening or what has happened. Don't just come to the chat and then come with your predetermined bias, maybe from yesterday or from the morning session, because this was the PM session, you know. So you have to be flexible, very, very essential. You have to be flexible, flexible, and you operate from a narrative perspective. Like, what is a week doing? What is a daily doing? What is a 4 or what is a 1 hour doing? So you want to align yourself and do make sure you're doing what, like, you're going in line with what the higher time frame is doing. Yeah. And you pay attention to price. Don't just look at patterns and say, hey, liquidity taking here, man, I want to short, I want to buy. So don't do that. You have to pay attention to price, and what price has done, the higher time frame, and yeah, what's most likely to happen from a higher time frame perspective. Not just hopping onto the lower time frame and acting from there. All right, so I believe this one was a bit long, but is what it is. So I hope you got some value from this one. Do subscribe and like. See you on the next one. Peace.